The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, checking in on Bitcoin. The CoinDesk Bitcoin price XVX index is trading at $45,698. Bitcoin is down about 3.4% over the past 24 hours. The CoinDesk Ether price ETH index trading below $4,000 right now, down about 3.8%. And the DFX CoinDesk's DeFi index is at 381 points, also retreating over 5%. Joining us now to discuss the crypto markets is Marc Lopresti, co-managing director and board member at the Strategic Funds. Welcome, Marc. So we see Bitcoin in retreat as well as the rest of the crypto market. Doesn't seem like there is any hope for a Santa Claus rally. Is it just frightful sentiment out there because of the tapering and central banks, some of them raising rate hikes?
Well, we certainly have a banquet of FUD, unfortunately, to look at this morning. And I probably should have worn a green handkerchief instead of a red one because maybe directionally that might help where Bitcoin's headed. But look, there's no doubt between the SEC's denial of 2 more ETFs last week, some things happening in Europe with the UK cracking down on advertising of crypto on social media platforms. But there's no doubt that Bitcoin and the crypto markets in general have shown a pretty high degree of correlation to the broader markets in the past couple of months. And I think when you have Omicron fears putting pressure on the broader markets, interest rate and inflation concerns, China taking the opposite direction, as Lawrence pointed out earlier, which is a very interesting point unto itself. And at the end of the day, we have to bear in mind, we still have Bitcoin up 60% and change on the year, Ether hundreds, 400% and change on the year. There's definitely some profit taking and some risk off. But if you look at the technicals, which we can get into, it doesn't look very good between now and January.
You know, Marc, about the profit taking, you would think that institutions would want to jump into crypto to show it on their books at the end of the year so that, a form of window dressing. And that was kind of a potential narrative, if you will. The counter to that, of course, was this idea of profit taking and trying to get some tax losses involved. So which is it? Has it ultimately been that narrative you think has won out, that this idea that they're taking profits and maybe the institutions just aren't there as big as we thought they would be at the end of the year? Is that, how would you take it?
Yeah, I think it's more profit taking. We haven't seen, as I think you and I talked about a few weeks ago on the show, we haven't necessarily seen patterns like end-of-year window dressing that we see with equity funds necessarily, creep into crypto asset managers. It's not something we do, of course. But I think it is profit-taking. And I think it's risk-off in general, right? You hear a lot in the equity market side when you have this type of interest rate environment and this, Omicron wave, which is something is undoubtedly impacting all markets across the globe. There's just not a desire to have risk on right now. And when you're up as much as you have been, if you've been in Bitcoin or Ethereum since the beginning of the year, you're not happy about what's happened since the beginning of December, but you have to be pretty happy about how your investments performed through the course of the past 11 3/4 months.
Oh, you're on mute.
So I just want to return to this point that you mentioned about the correlation with the broader market. There's kind of this myth among some in the cryptocurrency world that Bitcoin is supposed to act as a safe haven, right? It's supposed to act as a safe haven from the turmoil of the broader market. So is that true? I mean, or is this an aberration? Or as we go into 2022 and we're going to see more fears of COVID and more kind of these kind of shocks to the larger market, can we still hold on to this idea that Bitcoin can perform as a safe haven asset?
So I think that's a great question, Emily. And the answer is that narrative, in our opinion, is eroding. We saw that erosion occur this year. We think we're going to see it continue in 2022. That's not necessarily a bad thing because that's an indication of the maturation of an asset, right? A lot of things that we saw in crypto, Bitcoin in particular, that caused the catalyst of the increase in the price of the asset were those signs of a maturing asset class. Increased institutional adoption, increased correlation with other more traditional, TradFi assets. So is it an aberration? Maybe not, but it's definitely a narrative that we see eroding and going to continue to erode into 22.
So 22 comes along. Where are we going to be? How do you think things are going to play out after the new year?
Well, so I think we're going to trade in this sort of painful sideways range between now and the end of the year. You know, we're looking very carefully at technicals, the 50-day simple moving average at 44,778. We are dangerously close to that right now. If we drop below that 50-day SMA, we think we could see another 3 to 4, maybe 4.5% shaved off Bitcoin's price between now and Christmas. Looking at a 53,000 bull resistance level. If we can get there, we can get above that 50, closer to the 20-day SMA. We could see a little bit of positivity, but I don't think anything material or drastic is going to happen between now and the end of the year. Once we break out of this pattern, once we get our arms around Omicron, we digest a little bit more of this interest rate information, and then we're going to see continued upside trending. Look, we always say this, assets gather value through their scarcity. Ain't making any more Bitcoin. We continue to be bullish on the asset, and we think 2022 is going to reward those that hold on right now.